2025 has been a challenging year for dairy commodities. S&P struggled, butter endured a particularly difficult second half, yet whey proteins have continued the strong upward trend that started about 2.5 years ago. Today, we'll break down the key dynamics behind these diverging price movements and explore what the coming year may hold for the dairy complex. I'm Johanna Botta, and today I'm joined by John Lancaster, StoneX head of EMEA Dairy and Food Consulting, who flew in from Dublin. Welcome, John. It's so nice to have you here in the flesh.
Thank you very much.
So let's start with the basics. 2025 was not a great year for skim milk products and butters, but can you walk us through the main dynamics that drove prices in these two markets?
Yeah, it's really been a year of two halves. So the first half of the year was actually very good. Butter prices, while they had come off their record highs at the very end of 2024, they were very strong all the way through till June, July. And skim milk powder was at moderate levels, but it was holding kind of relatively firm. We had, I suppose, a couple of different factors feeding through to that. We had blue tongue in Europe in 2024, which had an impact on milk production in late 24 and for the first half of 2025. And that combined with very good milk margins from the farmer's point of view. Once we got into the second half of the year, there was a little bit of a shift in calving patterns because of the blue tongue. I won't get into the technical details.
Okay.
And you had the farmers making very good money because the dairy prices were high. That gave very high milk prices. And as maybe some of the other commentators would have talked about previously around grains, the feed costs were actually very low. So grains on the corn, on the wheat, on the soybean meal were close to or near 5-year lows. So the margin there for the farmer, the income over feed and the overall margin was very good. And the farmers reacted to that by producing more milk, and the shift in calving patterns helped push that milk into the second half of the year, really. So we've seen big year-on-year changes really from July, August onwards. Europe is currently running between 4 and 5% over the corresponding period last year.
So whey protein concentrate and isolate seem to be moving in the opposite direction from S&P and butter. Can you briefly remind us what these products are and also what they're typically used for?
Yeah. So kind of start with what whey is to start with. So when you make cheese, if you remember your nursery rhymes, Little Miss...
No.
No. Little Miss Muffet sat on her tuffet, eating her curds and whey. So when you make cheese, you get curds and whey, and the curds turn into the cheese. That be cheddar, Gouda, or mozzarella, and whey is the byproduct. When you make cheese, you basically split the proteins. So there's caseinate proteins, which end up in the cheese, and whey proteins, which end up in the whey, and they're in a liquid format. Historically, if we went back 30 years, a lot of whey was nearly a waste product. It was either being sold at a very low price, or even sometimes the producers would actually pay for it to be land spread as waste. And like anything where something is available at low cost, people look, okay, how do we make some extra value out of this? And they develop products like whey protein isolates and concentrates, which are basically...
Which I use.
Which are basically where they concentrate the protein content in the whey. So normal whey or dry whey, which is mainly used for animal feed, but also it goes into some food level products as well for human consumption. And that's a relatively low protein level. So they use different processes such as reverse osmosis and membrane filtration to concentrate up. That's where the concentration comes there. And to concentrate that up to historically 35% protein, but now as technology has advanced and as consumer preferences have changed, 80 and higher. And then whey protein isolate is even a more advanced version of that, where you're really just isolating out those whey proteins into a very pure form, 90% protein plus. Historically, again, a lot of the usage case would have been towards infant formula. So those lower protein wheys, the WPC 35s, a lot of that would have gone towards infant formula. And from the melamine crisis in China from 2007 onwards, there was this massive import demand there for infant formula, which helped drive the development or helped drive that industry.
Yeah.
But that's obviously slowed down a lot over the last number of years. The Chinese population is going into slight decline, and they are producing more of their domestic formula. So they started looking for other avenues. Sports nutrition became a really big part of that over really from the early 2010s onwards. So we see that on the shelves in all of our supermarkets.
That's what I use. Yeah.
Very good products. But more recently, one of the big drivers has been the GLP1 drugs.
Right.
Yeah.
Okay, so I was going to ask, given their strong performance, what factors are pushing WPC and WPI compared to other commodities, which seem to be lagging? But you've answered half the question, unless you have anything else to add.
Well, yeah, the GLP-1 piece has been really interesting, and it kind of maybe caught the industry a little bit off foot, at least at the start, because people weren't necessarily looking at it as being a protein driver. But a lot of the users of these drugs are being advised to take on additional protein to avoid muscle loss and muscle wastage as they're losing weight in general. And they've been moving towards the high protein wheys in the sports nutrition drinks and similar types of products to try and make up to try and stop this muscle wastage. And as those drugs have kind of gone down in price, and the Trump administration has been helping to do that with some of the policies they've done, and when we're looking into, say, next year, currently all those drugs are injectables. Tablet formats are likely to be approved in Q1 next year. So a lot of people just don't want to be giving themselves an injection once a week.
Yeah, a pill sounds a little bit easier than injecting yourself.
Yeah. And the expectation is that's going to be another move down the cost base then as well. So then you've got a wider potential market using these, a wider addressable market, and that continues the strong demand for those whey products as well. And that has also, it seems to have kind of gone into more of a popular culture piece. As the demand for those products has increased, now manufacturers, you even see it on cheese now. Cheese has always been a high protein product, but it's got labeling on it that says high protein.
Marketing at its best.
Exactly. Yeah. So the marketing piece has come through. Everybody's marketing products with high protein. And part of that is the GLP-1 piece and the kind of how that has moved into the general consciousness. Part of it is more people, the health nutrition piece from the sports nutrition and how that has been progressing as well, because that's still an ongoing trend. And so we've now got tortilla chips with high protein.
Well, wow. Well, I mean, if you're over 40 and you're a woman on social media, everything is high protein. So, I mean, the marketing is there. Okay, well, as the chart shows, S&P has been fairly subdued for the past few years. How do you see S&P prices evolving in 2026?
So we still have really good milk production globally. I mentioned there Europe, around 5% year-on-year increase at the moment. The US is in a similar category. They're the two biggest exporting blocks on the planet, as well as New Zealand. New Zealand milk production is not quite that strong, but it is looking pretty strong out through to the first half of next year. So on the production side, we look like we have enough milk coming through, and it's going to keep some downward pressure on pricing. Demand, we are at lower pricing levels here, so that should help spur on some demand. Dairy, unfortunately, is one of those kind of relatively inelastic markets where you need, relatively big moves in price to stimulate or take away demand from there. But I think at these levels or around these levels, we should see some consistent demand on skim. So while there might be some downside from here, it feels like it's probably relatively limited.
And butter, and I'm just looking at the chart here, seems to follow a more volatile pattern.
Yeah.
Do you think that prices have reached the bottom, or is there still room to move lower?
So butter's been a really interesting one. Like around this time last year, maybe a little bit earlier, we were at all-time record highs for butter pricing. It came off a little bit in Q1 and Q2, but was still holding over around the 7,000 type level. And we've really just dropped like a stone from August onwards. Butter is an incredibly European butter pricing, I should say, is an incredibly inelastic. So very small changes in supply and demand make big changes in price. I think the bigger structural issue for European butter is the competition on the export markets is really difficult. US butter is even cheaper than European butter still, so there's still a good discount there. And the US is producing a lot of milk and looking for markets for those products to go to onto the world markets, and is being more aggressive about going onto the world markets as well.
Right.
So it's European butter is in a kind of a tough place right now, and it needs to be at a lower price level to kind of try and stimulate demand and some of that export market piece, especially with the amount of supply that's coming in.
Yeah.
But it's trying to hold where it's trying to find where its level is going to be. So there's probably a little bit more downside here, but it's hard to say exactly where the bottom is going to be, unfortunately.
And before we let you go, because I know we've held you long enough, with WPC and WPI enjoying such strong momentum, could this attract additional production? And if so, is there a risk of oversupply emerging and pushing prices down?
Yeah. There was a joke in the industry maybe 8 or 9 years ago that people were building cheese plants to get the whey for the sports nutrition side of things. And the US has seen over the last 2 to 3 years nearly an unprecedented number of additional new cheese plants being announced, and all of those cheese plants have associated whey capacity. Most of it being directed towards the higher protein wheys, so the high protein WPCs and WPIs.
Yeah.
Even with that, and there's been a lot of investments here in Europe as well. Almost weekly you hear about either a small or medium-sized investment in increasing capacity, to be able to produce more of the high proteins. The demand side continues to feel really strong. And going back to the GLP1 piece, as those drugs as those drugs continue to expand, especially at a lower price point and in tablet form, it does feel like that demand is keeping up with the supply, or even more than keeping up with the supply at the current point in time.
John, thank you so much for being here with us in the studio and for all your insight. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.